The market takes a nosedive on the Fed catalyst. Are the bulls running scared? This is Invest with Jacob. Okay, guys, so in yesterday's video, we were looking for the market to drop down into the 60.70 to 60.20 ES area, and then we were looking for buyers in that zone. However, they did not show up, and the market continued to crater downward into the 5,900 areas. Now the question is, are the bulls running scared? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we are going to go over the indicator, which absolutely crushed it. If you didn't see yesterday's video or the day before, we went over the weekly indicator on 4 mega stocks. We went through NVIDIA, Bitcoin, Amazon, and Netflix, and showed you how this indicator is absolutely crushing the market on swing trades, and it's killing on day trades too. So let's jump into the chart and take a look. Okay, guys, so if you are new to the channel, we did create our own custom trading view indicator. It's called Invest with Jacob Pivot Point Pro. You can see it here on my chart. And it gives you these buy and sell signals that are on the chart. If I hit the I button, you'll see them go away and then come back. And what you have here on the left is on yellow, that is the pre-market trading. And then the right in blue, that is post-market trading. And overall, we don't trade that at all. We trade regular market hours, but we do have it on our chart because it helps the indicator get proper signals. You do need a trading view account, and you need real-time data on the ES and NQ for this to work properly. But it is absolutely killing the market. It did it again yesterday. So we're on the 5-minute SPY chart, and this is what we use to day trade off of. And right at the entry, we got a buy signal. See, at 6:45, we got this buy, and it rocketed straight higher. So we got in at the bottom. We got up to the top here, had a great winning trade. A couple bars later, we got this sell. It ripped straight down, $1.50 to the downside, or $1.30 to the downside. Crushed on that trade. Got out of that one. Got a buy here that was a quick winner if you got in. We actually didn't take this trade because I stepped away from the computer. And then we got a sell here that was, we took a break even here. And the reason we took break even is because it was pre-Fed. We were getting close to the Fed and it was choppy. And I just know how the market goes during that time. And we don't want to gamble on what happens with the Fed. Turned out short would have been great, but we did not stay in that trade. So we broke even on the last one. But you had this big giant rip winner, a sell winner, and a break even trade. So really great day again, day trading. And then the swing trading, guys, I showed you the last 2 days, 4 mega charts on how it works. It's crushing. Check out those videos if you haven't seen it. And here's the deal. I want you to have this, and I want you to have these easy trades. You see a buy, you buy. You see a sell, you sell. Super simple. It's based on price action. So it came up. Where did you get the sell signal? Right off of resistance. This black line is resistance. Where did you get the buy? Right off of support. This black line down here is a support line. Right off of those two levels, you got your buy and sell. It's based on price action and several other factors. So it's not just price action. You have to see the trade materialize, and then it gives you the sell or buy. And it's killing the market. You don't have to look at a million charts. You don't have to look at this and that and all these indicators and see if they're lining up and do calculus. You just simply wait for a buy or sell, and you get in the trade. It's super simple. I want you to have this, guys. So to get it, there's a link down in the description. Go ahead and click that link. It'll take you over to the web page where you need to be. It's $59 a month, and if you've seen the swing trades, it'll pay for itself on one trade for several years. Guys, this indicator is crushing, and I love it so much, and I want you to have it so much. I'm going to give you a 30-day money-back guarantee. You get the indicator. You use it for 30 days. If it's not for you, shoot me an email and say, hey, this didn't work out. I'd like my money back. I'll give you money back, full refund, no big deal, because I want you to try it out and love it, and I know you will, and you'll stay with it because it's so awesome. So check that out. I want you to be a part of it. Grab it there. Now, before we jump into the charts, one more announcement. Tomorrow will be my last video of the year. Next week is Christmas week, and trading is really slow. It's holiday period. You usually get choppy float trading. There's not a lot going on. It's a great time to step away from the market, spend time with your family during the holiday season, and I'll be back after the new year. All right, let's jump into the chart and take a look. Okay, guys, so here we are on the 4-hour futures chart for the S&P 500. And we've zoomed out a little bit because with the breakdown yesterday, we do want to see kind of where we're at in a bigger picture and understand that yesterday, while a big move down certainly doesn't break the bull trend, nor does it break enough support to tell us that the top is in just yet. So what do we have on the plate? Well, back here in October of 23, so a little over a year ago, we were down at 4,400, and we started building our fifth wave structure from there. So we had wave 4 here, started building our fifth wave structure. We're in the fifth wave of that structure. So you can see we've got 1, 2, 3, 4, and we're building wave 5 of this bigger wave 5 up here. So overall, what we'd be looking for here is a couple of different things. Is it possible that 3 was here and 5 was here? So we'd move 5 down to here, and we topped. And the top is in, and we're moving down in a much, much bigger correction. Is that possible? Yes. Are we sure of that, or do we think it's probable just yet? I don't think we've had a big enough move for this wave 5, which means that more likely we are completed wave 3 just recently and are moving down in wave 4 of a bigger structure. Now, because the bigger structure off of the October lows of 22 is a diagonal structure, because wave 4 got into wave 1 territory in a bigger sense, this is all going to be ABC structures, and we're dealing with that here where wave 4 would come down into wave 1 territory in that case. So we broke through support of an upper diagonal, and now we're looking at an overall bigger diagonal for that wave 5. So sometimes you have to zoom out of the micro counts to see the bigger count to understand that there's still other ways for the market to be bullish. Just because you break upper support doesn't mean that the top is in just yet. Now, we do have support come in at about 57.80 down to about 56.50 for this wave 4. Wave 1 territory is at about 5800. So we'd look for them to come down into that area, but I don't think it's going to necessarily be direct. And the reason for that is twofold. One, if you understand market dynamics, you will understand that today's move breaking down below 59.50 on the SPX put us in a negative gamma regime, which means that the market is going to feed upon itself to the downside. And what happens in those cases is very often Wall Street doesn't want to pay those puts. The put walls break and they don't want to pay them. So they will rip it back up over the negative gamma area, which again was 59.50 SPX. And if they rip it back up over that area, I would expect this to be a B wave, kind of some consolidation up here, and then a C wave down into this area before heading back up in 5. Now, all of that's going to be dependent on what the market does from here. Can they continue to feed upon themselves straight down into this box? Absolutely. There is no question that downside can continue directly into this box, and that would be wave 4 in that way, in that move, I should say. From there, we'd look for an ABC up in wave 5, still looking at that 6,300 plus area overall. Now it would be about 6,280 to 6,370 or so since we've contract rolled up. So it's going to be a little higher, but 6,300 still is where we're looking at in the big picture, as long as they can hold this support box. Now, if that support breaks, we will be looking at this wave 2 low at about 55.25 here. If they poke below that and break that low, then it's very likely that we are on our way down, and we're going to test this low here at 52.50, but ultimately I think the April lows. And should those break, then the dam has opened and the downside has started to flood. So we will see what happens if and when they can get down to this blue box. But this is what we're looking at overall from a bigger picture. I do still think they need one more wave higher towards 6,300 to complete the pattern, but I will not fight price if they break down below these levels that we've given. So again, I do think that next week and into New Year's will be a floaty, holiday, choppy kind of week like this in a B wave. Then I think the first of the year or so, we can see a smash down into this box here, and then it'll depend. As long as they can hold, we'll look for an ABC higher. If they fail here, then all eyes are on 52.25. Over on the NASDAQ. Okay, so on the NASDAQ, it's a little bit different. They still have some upside support left. They still have their micro 4 availability there. It's a small window here, and they already hit it yesterday. So this is something to watch for. They can very easily squeeze this higher. And we could see the low in for wave 4 on both charts technically if we start to see this kind of move here that accelerates through the 22,000 area. We would look then for the 23,000 plus area overall and that 23,100 or so level. But they can come down a little bit lower, but they must hold this wave 2 low here at 21,000. If they break through this low at 21,000, then the wave 4 is deeper than wave 2, can no longer be a diagonal. So wave 4 can't come below wave 2 here. This would be your support for this diagonal structure. As long as they can stay in this blue box or above, we would look for the bulls to rally again in a three-wave structure, get one more high up towards 23,000, and then we'd look for them to turn down strongly. Now, if they do break this blue box and they start down, it is very possible still that this is wave 3. Okay, wave 4 would then come down to test this 20,100 level up to about 20,353. So this low down to the wave 1 high. We'd look for it to get into wave 1 territory and then come back higher in that diagonal structure. So overall, still have a bullish setup. The trend is still up. Yesterday was a down day. There's no question about that. But until support breaks, pressure remains up. We talk about that all the time. And they have broken a bunch of upper support, but now they're getting into the middle supports. Should they break through those, then we start to look at the lower supports where things start to get really dicey for the bulls. So again, as long as they hold this blue box, we would look higher to 23,000. Below that, we'd look for 20,400 to 20,000 even. And then below that is a very big warning shot to the bulls. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial. That's because I want you to get in there. I want you to check it out, become part of our trading team, and make sure you love it before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material. We have our Elliott Wave for Beginners online course, as well as our Advanced Elliott Wave course. These courses are helping real traders make real money and finally understand the market in a way that makes sense. These patterns can be so confusing and can really throw a wrench in the works. And if you don't understand them, they can make you think that the market is rigged or irrational or anything else. The advanced course goes over all of the things we've been talking about, mostly the big one being diagonals, but it goes through advanced fib levels. It goes through flats, triangles, trading Elliott Wave, really a strong course on understanding complex markets and how to trade them. It helps you become confident in what's going on overall with key levels, and key levels are what matters. As you can see on the screen, our traders are loving it. They're making money because of it. And if you want to be part of this, we'd love to have you. But if you are just getting into Elliott Wave or this is too advanced for you, we have our Elliott Wave for Beginners online course. And this course is helping real traders make real money and finally understand this market in a way that makes sense. As I said, it's very confusing when good news makes the market go down, bad news makes the market go up. A hot CPI reading and the market launches higher, a dovish Fed and the market goes lower. It's very confusing because the news doesn't matter. The market doesn't care about the news. It cares about key levels. And we know what happens when those key levels hold and what happens when they break. This gives you a huge advantage over the rest of the market. In this course, we have 25 videos where we go through 3 parts. We go through your introduction, where we go through your expectations, your mindset and emotion, the KISS method, and why it works. Your chart setup and tools, where we go through all the tools used with Elliott Wave Theory, how to use them and why, and the Elliott Wave for Beginners area, where we go through all of the waves, everything you need to understand, such as the theory of alternation, corrective depth theory, the pivot, everything you need to make sense of an irrational market. Now, the cool thing is, if you want to get these at a discount, we do have our course bundles where you can get $37 off by getting them both at the same time. But if you want to get them for free, simply check out one of our monthly rooms, as they are included in this price. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over all of the different stocks that you want to see. I go through all of the different ETFs, the indexes, everything you want to know, where the counts are, trading, price action, everything you need to see. This call alone is worth the price of admission. We also give you the Advanced Elliott Wave course and the Beginners Elliott Wave course, all of that for $49 a month. We trade the SPY and the QQQ, and we swing in day trades, so we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, advanced training, and income trading, you need to check out PT's Throne Room, because in there you get everything you get in the Invest with Jacob room, as well as futures trading, individual stocks, his income trading method that crushes, as well as his reduced risk binary method that absolutely crushes the market, gets you in at a little price and get you big multiples on your money, and it's how he structures the trade that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today, you need to zoom out just a little bit. We do have a bigger wave 4 target on our hands, but we also have a negative gamma situation, which means one of two things. Either the market is going to feed upon itself and directly shoot into this box, and then find support and come higher, or they're going to start squeezing as of tonight and take us back over the 60-50 level and back up into these highs and directly towards 6,302. If they break this wave 4 box, then all eyes will be on this 55.25 area, 55.30 area, this wave 2 low. If they break below that, that is a major warning to the bulls. Over on the NASDAQ, okay, on the NASDAQ is a little bit different because they still have some upper support left. This box here that we have at the 21.3 to basically 21,000 level, as long as they're above this wave 2 low at 21,000, they're in good shape. If they break below that low at 21,000, then we're looking down here at this 20,000 to 22,100 area for support for a bigger wave 4, where this circle wave 4 would move over. And from there, we would look for them to push higher again. Guys, the top could be in. There's no question about that. I'm not here to tell you we're definitely going to 23,000. We're definitely going to 6,300. I'm here to tell you we're above support. As long as we're above support, the bulls are in control of this market. Pay attention. If support breaks, be very cautious with your long positions and understand that this market is nearing a top. We have been warning about this for a long time, that this market is in a final phase of a melt up situation. And when it does break, it's going to be ugly. So keep that in mind as we watch the market over the next few weeks to months to see how it plays out. That is your market update for today. I will talk to you tomorrow.